You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Markets have been left uneasy after the government decided to keep certain spending items outside its official fiscal target. This move has fueled debates among investors and analysts, many of whom see it as a potential risk to fiscal discipline. The decision came alongside heightened market attention on key economic indicators, both in Brazil and abroad, adding extra layers of uncertainty. In the United States, fresh inflation data is expected today, specifically the Producer Price Index, that is PPI, for July. This figure comes at a critical time, with traders betting on possible interest rate cuts from the Federal Reserve as early as September. The U.S. numbers are part of a global data-heavy day. GDP results from the United Kingdom, the Eurozone and Japan are also due, while China is set to release updates on its retail and industrial activity. These releases are expected to shape the near-term sentiment across global markets. Here in Brazil, attention is turning to the latest service sector performance numbers from June, released by the IBGE. This follows surprising retail sales data that showed an unexpected drop, reinforcing market speculation that the central bank may cut the Selic rate before year-end. Corporate news is also in the spotlight, with investors awaiting the post-market release of Banco do Brasil's latest earnings report, which is expected to be a key driver for local equities.
But despite the busy data calendar, the real market buzz today is about the government's fiscal approach. The decision to exclude certain expenses from the fiscal target has been perceived by many as a breach of the discipline that investors want to see. Analysts warn that while the move may provide short-term relief for public spending pressures, it could undermine confidence in the government's long-term fiscal strategy. Such concerns are particularly sensitive at a time when Brazil is navigating a fragile economic recovery and global conditions remain volatile. In short, it's a day when traders are juggling multiple storylines, from inflation and GDP figures abroad to domestic economic data and corporate earnings, all while trying to digest a fiscal policy decision that could have longer-term consequences. Whether the market takes this as a temporary adjustment or a signal of deeper fiscal leniency will depend on how policymakers communicate their intentions in the coming days. For now, the message is clear: the balance between spending flexibility and fiscal credibility is under close watch, and investors are paying attention. Stay subscribed for more videos.